So a new financial tax year is almost upon us in the UK, which means that from April 6th, the ISA allowance of £20,000 renews, and you're able to start saving or investing money in one of the best tax wrappers available to individuals. If you're not quite sure what an ISA is, ISA stands for Individual Savings Account. It's a specific type of account that allows you to save and invest a certain amount of money every year without having to pay tax on any growth, whether that be interest, dividends, or profits. For the last 4 tax years, the maximum allowance you can deposit into an ISA has been £20,000, and the amount for the next financial year is expected to be the same. When ISAs were first introduced, though, by the government about 24 years ago, the maximum allowance you could deposit into an ISA was £7,000, so there's been a substantial increase over the last few decades. The important thing to note about the ISA allowance is that if you don't use your full allowance in the relevant tax year, it doesn't roll over. Essentially, you either use it or lose it. So if you haven't done so already, I would highly encourage you to use up as much of your allowance for this tax year as possible by 5th of April. I'll be looking into stocks and shares ISAs specifically in this video, but there are quite a few other types of different ISAs, including cash ISAs, lifetime ISAs, innovative finance ISAs, and junior ISAs. I'll be focusing on stocks and shares ISAs because rather than saving your money like you would in a normal savings account or cash ISA, you're actually investing your money in company shares, funds, or bonds. Over the long term, stocks and shares ISAs have the potential to deliver higher returns than cash ISAs, so they're definitely of interest to anyone looking to build long-term wealth. Some of the bigger platforms such as Fidelity and Hargreaves Lansdown are offering incentives such as cashback of up to £1,000 if you transfer an existing ISA in time for the new tax year. Over the last couple of months, I've been consciously researching the different stocks and shares ISAs available in the UK in preparation for the new tax year. I wanted to share some of my findings in the hope it would help someone else in the same position, although it is worth bearing in mind that circumstances and risk tolerances are very different for every individual, so please do your own research. With that said, let's get into it. This will be different for everyone, but I have 3 key criteria that I consider to be important when it comes to selecting a stocks and shares ISA provider. Number 1, they must be regulated by the Financial Conduct Authority, so the FCA, and covered by the Financial Services Compensation Scheme, which protects funds of up to £85,000 should the ISA provider go bust. Number 2, low running costs are also important because they can potentially impact the return on investment. This is applicable to the platform charge, any management fees, as well as the cost of buying and selling the shares or the funds themselves. Number 3, the platform must offer a broad range of investment products, including UK, US shares, and ETFs. In order to do a deep dive into the different stocks and shares ISAs available, I've actually compiled an Excel spreadsheet, which I'll show on screen now. This has helped me draw comparisons between the different platforms just to make sure I'm aligned with my key criteria. It's worth noting that I've only included brokers that meet criteria number 1, in that they're regulated by the FCA and covered by the compensation scheme. So you may notice that firms such as Interactive Brokers aren't included in this review because I've purposely excluded them. So the spreadsheet itself includes 19 popular UK platforms which offer stocks and shares ISAs and compares relevant data such as fees and the range of products available. I've also noted whether fractional shares are offered because I think it's a useful feature for beginner investors or those investing smaller amounts. Rather than run through every single platform individually, I'll just do an overview of each platform category, which includes well-established behemoths such as AJ Bell and Vanguard. I'll also include more recent brokers that have cropped up within the last 15 years or so, such as Freetrade and some lesser-known UK platforms, which I only came across during my own research. The biggest appeal with the older platforms in that they've spearheaded the investing arena for many years and accumulated years' worth of experience and expertise to run competently and offer peace of mind to investors. For example, Charles Stanley was founded more than 230 years ago and is one of the oldest firms on the London Stock Exchange. Most of these platforms have 25 plus years of experience and track record, which makes them really attractive. This does come at a price though, in that almost all of the big guns apply transaction fees to trades, and they all charge a platform fee. Vanguard has no transaction fees, but does include a platform fee of 0.15%. You're also limited to buying Vanguard funds only, which is a bit restrictive for investors who want to dabble with individual shares or buy non-Vanguard products. Aviva Investors also has a zero transaction fee, but again, you can't buy individual stocks, and the platform fee could be a drawback for investors with large portfolios, as it's calculated as a percentage of your whole portfolio value. So if you had the full ISA allowance of, say, £20,000 invested, you'd pay an annual platform fee of £80, which would increase or decrease year on year, depending on the performance of your investments. Hargreaves Lansdown isn't any cheaper, with a 0.45% platform fee and transaction fees of $11.95 per trade, which reduces slightly if you execute more than 9 trades per month. There is also a cap on the platform fee of £45 for investments held in shares rather than funds. In saying that, you do get what you pay for, and HL tend to have really good customer service and excellent learning tools and resources. They'll also close your account and refund their annual account charge if you're not 100% satisfied with their service in your first 12 months under their ISA satisfaction promise. Most of the big platforms offer UK and international products, but this isn't the case for the likes of Vanguard, as previously mentioned, as well as Best Invest and Willis Owen, which are limited to UK products only. The volume of products available on each platform can also vary drastically. For example, Interactive Investors has over 40,000 global stocks, which makes them a great option for variety. But this might be overkill if you're planning on holding 1 or 2 ETFs as your investment strategy. If you're looking for good value and a wide range of international products, then Interactive Investor is a decent option for those wanting a more established platform. Their transaction fees reduce to zero if you make at least 3 trades per quarter, and its flat rate platform fee of $4.99 is comparable to some of the popular low-cost trading apps we see today. It's also the only well-established platform to offer fractional shares, which is a great bonus. I think it would be suitable for beginner investors as well as those with large portfolios looking for good reputation, good investment options, and low fees. So moving on to the next batch of investment platforms then, these companies entered the investment scene in the last 15 years, and the one thing they have in common is that there are no transaction fees. eToro, Trading 212 and Invest Engine have also done away with platform fees, which is really attractive, especially for those early on in their investing journey looking to minimize costs. Freetrade has a monthly fee of $4.99 for its ISA product, while Dodl charges 0.15% annually, so all these platforms pretty much align with my low-cost criteria. It's worth noting, though, that you can only trade in US dollars with eToro, which means that you will incur a currency conversion fee on withdrawals and deposits. There's also a $5 withdrawal fee and a $10 inactivity fee after 12 months of no trading. But you might decide these fees are worth it, as you're able to use eToro to buy crypto, and its social trading feature is useful if you'd enjoy tracking the trades and portfolios of others. Other limitations with some of these platforms also include restricted investment options. Invest Engine has 0 fees, which is great, but you can only purchase ETFs, so depending on your investment strategy, this may or may not be the platform for you. I personally would prefer to have a selection of options when it comes to funding my ISA to include individual shares, so Invest Engine isn't currently an option for me. Dodl, the app-only investment platform by AJ Bell, is also limited to 80 shares and 30 ready-made funds, which isn't the broadest selection. They're also the only platform in this category not to offer fractional shares. Freetrade and Trading 212 probably have the fiercest rivalry in this category, with Trading 212 edging out over Freetrade due to its commission-free trading, 0 platform fees, and over 12,000 global stocks. Its foreign exchange fee is also one of the lowest available, and its mobile and desktop trading apps are super easy to navigate. With over 2 million customers, Trading 212 is fast becoming an attractive option for ISA holders, and certainly ticks my boxes in terms of fees and investment options. That being said, this platform has been trading in the UK since 2013, which is a minuscule amount of time when compared to, say, Charles Stanley, which has been around since 1792. If a long-standing reputation is an important factor for you when choosing an ISA provider, that it might be a few decades before you consider handing over your cash to Trading 212. I think for me, Trading 212 stands out here as the overall preferred option in this category. But let's move on to the final category of ISA providers, which comprises a few obscure companies that you may not have come across before. Apart from the more established XO, all of these platforms were launched over the last 10 years. You'll notice that transaction fees are quite low across the board, but their platform fees are mostly comparable to the bigger institutions, such as Hargreaves Lansdown. Despite this, the investment options for all these platforms are quite limited. For example, with XO and Strawberry Invest, you can only buy UK listed shares and ETFs, while Moneybox only offers a small amount of US shares and ETFs to choose from. Similarly, with Wombat, you're limited to 30 themed ETFs and access to a small number of UK, US and European stocks. So overall, not the best selection when it comes to investment options, especially for the platform fees you're paying, which will likely sting a little for medium to large portfolio holders with substantial sums. What is quite nice though is that both Moneybox and Wombat offer an in-app feature that rounds up your purchases to the nearest pound and invests the change. So it's really good for people that are new to investing and want to start off with small amounts. None of the options in this category really meet the criteria I set out earlier in the video, but if I had to choose one, I would go for Wombat. Their fees are low, they have a little product diversification, albeit not as much as I would like, and they offer fractional shares. So if you're still with me, fantastic job. That's my analysis of the different platform categories I've compiled done. I have included a link in the description box below to my spreadsheet if you want to take a more in-depth look at it as well. It's also worth noting that most high street banks such as Halifax and Barclays also offer stocks and shares ISAs, so they could be potential options for further research. But I found their fees don't tend to be as competitive as the online-only platforms. There are also robo-investing platforms such as Nutmeg and Money Farm that invest your money in tailor-made portfolios for a slightly heftier management fee. Personally, I'm more interested in exercising my own investing muscles and controlling where my money goes, rather than having this done for me. But again, this comes down to personal preference and your own risk appetite. For now, I just prefer the DIY approach to building my own investment portfolio because it's quite exciting to learn the ropes myself. So for that reason, I'll be using Trading 212 for my stocks and shares ISA in the up and coming tax year. If you think Trading 212 might also be the platform for you as well, be sure to sign up using my link below and you and I will both receive a randomly selected free share worth up to £100. I just think Trading 212 aligns really well with my criteria. As mentioned earlier, the platform has no trading fees, no platform fees, a good selection of investment products, and its foreign exchange fee is also one of the lowest around. I really like its mobile and desktop trading app too because they're quite intuitive and simple to navigate. I'd be really keen to hear if you have an existing stocks and shares ISA and what platforms you're considering in the new tax year. Do let me know in the comments below as it's quite interesting hearing about other people's investment journeys. With that said, thanks for watching until the end. Do give this video a like if you found it useful, and I'll see you in the next video.